Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the wait, is it over? TikTok says it signed agreements for the new US joint venture. Plus, who better to talk about the new TikTok era than former CEO Kevin Mayer? He joins us at the top of the hour. And the latest reports on OpenAI's potential valuation, the Wall Street Journal giving it an $830 billion price tag. But first, we go to our top story. The details, are they there for a proposed TikTok deal? Bloomberg's Kurt Wagner, who covers social media, can talk us through the intricacies because we understand that still ByteDance will be playing a role, but a less than 20% role.
That's right. So ByteDance will have an ownership stake in this new U.S. entity. We previously reported as well that ByteDance will be licensing its content algorithm to this new U.S. TikTok. That they would then use that licensed algorithm to build a new one based on U.S. user data. But the law, Caroline, is pretty clear, which is that ByteDance is not supposed to have any operational role in this new U.S. TikTok. And so this has sort of been the complaint all along, is ByteDance's involvement, even if it's a small ownership stake or as a licensing partner on the algorithm, is that considered too much? I don't know if anyone is actually going to push back and try and fight this. No one has to date, but those who are following the letter of the law do have questions about whether this actually follows the letter of the law.
And also the players involved, Kurt. Oracle, which seems to be everywhere at the moment, is playing an outsized role with a 15% holding, but there are other private equity involvement, there's Middle Eastern involvement.
There is, and Oracle gets all the headlines because, it's the large American tech company. It's also going to have an outsized role in terms of sort of securing that U.S. data. You may recall that there was a similar arrangement agreed upon a few years ago called Project Texas that was supposed to have Oracle at the center of protecting this. What's interesting about that is that at that time, the arrangement with Oracle was not considered to be a solution. Regulators in the U.S. did not feel that it went far enough to actually protect U.S. data. Now they're sort of pitching the same framework as they did a few years ago. And again, the question is anybody going to step up and actually push back on this? But as you mentioned, there's several different parties involved. Everyone is even Oracle owns only 15% of this. So there will be a lot of sort of hands in the pot here.
Bloomberg's Kurt Wagner, we thank you. Extraordinary story, a developing story. Let's talk about what we can expect from a U.S. majority-owned TikTok. None other than Kevin Mayer. He is co-CEO of Candle Media. You're also with a former TikTok CEO. You're the COO of ByteDance as well. And it blows my mind to think that it was August 2020 when you resigned because you couldn't see a path forward of managing TikTok globally. 5 years later, here we are, Kevin. What do you make of this potential deal?
Well, here we are. Thanks for having me. I really appreciate it. Look, I think Kurt did a good job of describing the deal. I think it works operationally. I think having a company like Oracle, a very trusted company run by Larry Ellison, who's a trustworthy figure, obviously, being in the center, in charge of looking after and securing that U.S. data, that's crucial. And I think they're licensing the algorithm from China, so ByteDance will still own the code. But I do think this license will take another instance of the algorithm, all the code, put on Oracle servers, and then trained on the US data that Oracle alone has access to. So I think it's going to end up having a vastly different feed and sort of content algorithm than you'll see around the world. So I think that will work. And I think that ByteDance will, is now below 20% ownership, 19.9% ownership. That's a substantial difference from status quo. And I do think that ByteDance has an operational role commercializing TikTok, selling ads, making sure e-commerce works and all the other commercialization factors. But really, it will be run by a U.S. board and it'd be a separate U.S. company.
Kevin,
it works.
It works, but the proof is in the pudding as to whether the algorithm is as powerful. How do you see, as someone who's in charge of content development and wanting to get your content out there in a marketing capacity, do you have confidence that it will be as good without ByteDance as heavily involved?
Well, I think it probably will be. There's a lot of intricacies and a lot of AI, that's the word of the day, in that code. And I think that code base being kept intact is crucial. I think had they tried to recreate a new algorithm from scratch because of security concerns, that would have been exceedingly difficult. That has taken years and years and thousands of engineers in China to develop this very sophisticated AI recommendation engine. So the fact that they'll have access to that it will remain interoperable with all the other TikTok instances around the world. I think that matters quite a bit. And I think just retraining that same code base, that same algorithm with US data should provide a very robust solution. I think it will be seamless.
I'm really interested in that interoperability, because as someone who can see the power of TikTok, because you are able to get global content, not just US focused content, is that really going to work? Is that something that you think will it still remain a global business, even though you're having this US part hived off?
It has to. It has to remain global. I think a social media platform, and I would call TikTok more social entertainment actually than social media, that has to be global. If it were to be siphoned off and cordoned off from the rest of the world and having a US only presence, I think that would be a big detriment to US users. As I understand it, that's not the case. It is interoperable. And I think from a user perspective, be seamlessly accessing content from around the world and vice versa. It's the recommendation that will be US based only.
I mean, you just think about the entertainment element. I mean, TikTok had its first red carpet moment yesterday doing awards. I mean, this really is trying to be a juggernaut of the way you and I consume our content going forward. Just from the national security perspective, how do you think that has been silenced in terms of criticism? Because many feel that perhaps ByteDance still has a bit too much involvement, particularly if it gets some profits as well.
Well, I think ByteDance deriving profits, they're due that. I mean, they built this entire ecosystem, this entire code base, the technology, the app. They paid a lot of money in marketing to get that app downloaded on hundreds of millions, billions, frankly, of devices around the world. They've earned that right to have a participation in profits. And I think it's structured in such a way that's very fair. And I do think that from a national security perspective, again, having that data walled off, making sure that that our potential adversaries outside of the US cannot access the algorithm again, how that algorithm recommends content moderation policies, and the actual data underneath it that drives the training of that algorithm, the fact that that is controlled by Oracle. It is like Project Texas, but I think Project Texas would have worked as well. So I think this is going to solve the whatever legitimate national security concerns there were, now solved.
The consumer has kind of cared less and less. Since the first ruling, since that first under the Biden administration desire to block to block TikTok, or at least separating them from ByteDance, initially people were really worried about the national security element, and now it seems that has faded. Do you think consumers are going to be interested in what they're now presented in terms of the algorithm? It's so interesting. I now get a STEM element in TikTok. They've already tried to confront that feeling that we're being dumbed down versus perhaps what they're being served by the competition in China.
Yeah, look, I think it's all just pretty good news. I think that Americans will be well served by having another voice, another platform. I think Americans speaking to Americans on this platform, and Americans speaking to the world and the world back to us, is healthy. It's a healthy dialogue to have. I think that if it's done in a way that is protecting our interests, that's protecting our security, I think that's very good news for consumers here, and I think they'll be well served. So I think it's correct that consumers should have now put this in the back of their mind a little bit. This seems like a permanent solution. The only element of doubt here and risk is that China hasn't come out and explicitly, the Chinese government hasn't blessed the deal yet. I'd be a little concerned about that. You know, back 5 years ago, we almost had a deal with Oracle, you may recall, and the Chinese government put an end to it. It looks like, by all accounts, in the Chinese media, the right words are being said today and then in the last few days about the deal. Looks good. Looks like China will approve it. Last little fly in the ointment, but again, wouldn't be too concerned about it. Looks like it's going to happen.
You're at the very cutting edge of where media is moving to. You're sort of the lead architect behind Disney Plus and how it was unveiled. You're now thinking about new areas of brands, and you're helping Coco Melon get everywhere in a cameo for kids, for example. What is TikTok in terms of its competition? Because we're also considering a totally different media landscape. We're thinking about whether a Netflix owning a Warner Brothers would be the real competition. Is YouTube? Is the real competition TikTok? How do you see this evolution right now?
Well, there's a lot going on in the media business now. It looks a lot different than it did even 5 years ago. There's young people, and even people my age and across the demographic spectrum. People are watching more short form entertainment. That's something that TikTok in the beginning, YouTube, pioneered short form entertainment. It became full screen vertical with vertical phones when TikTok came along, and now YouTube is doing that with Shorts. I think there is a sea change in how people consume content, where the influence comes from. I mean, if you look at today, the landscape and what's more central to the culture, is it Hollywood? Is it TikTok? Is it YouTube? The answer is it's a mix of all of the above. And as usage patterns continue to evolve, I think there's going to be some challenges for Hollywood to catch up. My company, Candle Media, we own a company called Moonbug, and you mentioned Cocomelon. Cocomelon is centered on IP derived from YouTube. It's on the YouTube ecosystem. We're on Shorts. We're on the traditional YouTube, video. And we have over 200 million subscribers to that one English language channel. And we've been the biggest show on Netflix. So I think there is taking advantage of all the different platforms that people interact with, streaming, paid streaming services, advertising supported streaming services, theatrical windows. We're having a Cocomelon movie come out in 2027, and YouTube and TikTok at the center of that IP generation machine. That's the future of media, and media companies that are really at the cutting edge are really looking YouTube, TikTok, short form video alongside the long form traditional storytelling that has been their bread and butter for decades.
Do you have any anxiety for Hollywood, for IP, for content creation, if indeed Netflix does take ownership of Warner Brothers Discovery, if Paramount does, for that example, and indeed what it means for your old alma mater, which is Disney?
Well, Disney's in a great position. Disney has the IP, the franchises, they have the brands that matter. Disney, Star Wars, Marvel, Pixar. Disney's in a pretty unassailable position. Put them aside for a second. What Hollywood needs is a healthy ecosystem. They need studios that have enough revenue to cover their costs, that are profitable, and that are in a position to compete against these behemoths like TikTok, like YouTube and Google. So a combination there between Warner Brothers and one of Netflix or Paramount is crucial, I think, to maintain the health and the profitability of that ecosystem. It's better to have fewer competitors that are more financially viable and can buy more product and support a high production value than having more buyers, and one more buyer being Warner Brothers independently in a weaker financial position. So I think that a combination is good. And even though Netflix won the first round, don't count out the Ellisons. They're incredibly smart and aggressive. Don't count out Jerry Cardinale at Redbird. These guys are very serious. I think they're going to come back with a higher bid. And when they approach, and remember, shareholders still haven't spoken yet. I think the likelihood here is that Warner Brothers ends up with Paramount. And I think it's going to cost some jobs, obviously, in Hollywood. There's no getting around that, but ultimately good for creators.
I think we might have to have you back very soon as all of these stories unfold. Kevin Mayer, what a joy to have you on. Candle Media co-CEO and former TikTok CEO and COO of ByteDance. Now, let's get back to these markets that are in risk-on mode as we head towards the very shortened week next week ahead of the holidays. The Nasdaq is up 1.2%. In fact, stocks are rising even as traders face the expiration of a record pile of options today. We're seeing Bitcoin up 3.3%, but we're also looking at key names such as Oracle. We're up 7% as that TikTok deal. Is it near it closing? What does it mean for Oracle's business model as its cloud partner? This is Bloomberg Tech. Take a look at Oracle shares. They're doing strongly today, and everywhere you turn this week, Oracle has dominated the headlines. From anxiety around data center timetables, data center leases, along with mounting debt piles, ability to raise financing for the Michigan project, not to mention Larry Ellison's other potential bets on Warner Brothers Discovery and now TikTok. How is Oracle benefiting from this sale? How is it affording all of it? Let's go to Mandeep Singh briefly. He's Global Head of Tech Research, Bloomberg Intelligence. So why is the TikTok deal good? Why is all of this good for Oracle or not?
Well, right now, I think the concerns around Oracle stem from the fact that they can't finance that infrastructure build out. But I think the TikTok news and just this Michigan sort of build out happening is another sign that things are moving incrementally, and they have given a revenue guidance for the next 4 years. Even if you don't believe their RPO number, you have, intermediate bogeys, 32 billion in IAS revenue for next year, 73 billion the year after. And for that, they have to build out infrastructure. Without that revenue won't gonna come to fruition. So from that perspective, these incremental steps are positive. And, if the fact that they can build out a data center in Michigan, to my mind, is another step towards, realizing that 32 billion in revenue next year.
I hope you're around next week, because I have a feeling Oracle will also be on our minds then. Mandeep Singh of Bloomberg Intelligence, thanks so much for all of your coverage this week and your analysis. Let's get more on the market's moves today. Stephanie Aliaga is with us, global market strategist at JP Morgan. So, we end the week on a high, but wow, have we been riddled with AI doubts. Oh. Where has your mind been at?
Yeah, it has been a really interesting tape in recent weeks and months. I mean, the debate around AI, the return on investment around AI, around the quality of the balance sheets, the war on the model front, right, between ChatGPT and Google's Gemini. And I think moving forward, markets are realizing this is going to be less of a competition on just the innovation, although the innovation is really important, but also on balance sheets. And the show me the money, this kind of desire for markets to really see companies with AI-tied cash generation, which is a tricky environment to be in. Because if you want to see growth from AI, but cash, you might need to actually let go of some cash in the near term, right, to invest in some of these infrastructure build-outs to ultimately get the growth that we're looking for.
I mean, investors being asked to be patient. The word I've heard time and time again this week is discerning. Yeah. Is that what you feel people are starting? It's not all boats are rising. We're picking our winners already.
Exactly. It's we had 3 years of AI providing this really powerful tide, lifting a lot of boats. And this year we've seen a lot more discernment, right, amongst these names. We think that can continue. Now, it doesn't mean that AI isn't still this kind of rising tide, but we're now seeing the different markets here. The markets around models, the markets around cloud services, the markets around infrastructure. And now we want to see who are going to be the leaders, who are going to be the companies that actually capture the best economics in each of these markets. So it's not necessarily zero sum, but now competition is really ratcheting higher, and balance sheets are starting to fray a little bit, right? We're tapping into debt markets, so companies are also seeing greater differentiation amongst themselves that way.
You are across that perspective. Should people be owning the debt of these big companies, corporate bonds as well as equity exposure?
I mean, I guess it depends on what you're looking for. I think the Fed is lowering interest rates, and if you see interest rates move lower more broadly, like there is going to be demand for this debt issuance, and we're expecting a lot of that. There's also $500 billion in dry powder and private credit, right? So I don't doubt that this capital will find a home, but I think the question for investors is to just make sure that you have some diversification to this theme in your portfolio, because as extraordinary and transformative as AI is going to be, the last few weeks have reminded us that it's going to be choppy along the way. There can be surprises and unknowns. So you want to make sure your portfolio is built to withstand those choppier waters while still benefiting from the secular opportunity that remains.
What almost has been the theme of 2025 is how dominant the private sector or private sector names have been on your maybe overexposure in your public portfolio. I think of a name like OpenAI. We think of SpaceX and its valuation. OpenAI potentially being $830 billion, just to pip the post on SpaceX's $800 billion valuation. How much are you seeing your clients wanting more exposure to the private markets, and how is that going to translate to public in 2026?
It's so key, and it's such a big difference from what we saw in the internet era, right? When all of these internet startups were just going public on day one. And today you have these AI native companies reaching scale that we've never seen before in private markets. And of course, there are the big model developers. But what's been actually most interesting for me has been seeing the explosion in AI applications. If you think about who are the companies that are really at the center of end user demand, selling to consumers, selling to businesses, it's these more niche AI applications. And they are growing at scales that we've never seen before, right? The average AI startup reaching $100 million in under 12 months. On average, that's taken startups about roughly 10 years to achieve. You had Patrick McGoldrick here yesterday from our firm talking about this dynamic. So absolutely, if you want some of that growth exposure, you're going to need a look in private markets. In our long-term capital market assumptions, we actually see that the long-term return expectation in private equity at 10.2 versus large cap public equities in the US, 6.7. A big reason for that is starting valuations in public equity markets. In private markets, you have that issue too. So selectivity is going to be really, really important, but we still think there's a lot of opportunity.
What about opportunities for IPOs next year and those who haven't got the private exposure getting it when it goes public?
Yeah, that's going to be really interesting because some of these companies like OpenAI and SpaceX, at their private market valuation, they would already be top 15 companies in the S&P 500. So they're not even public yet. And when they do go public, investors, we're going to see what the demand is at that time. But you're going to be getting into a company that already looks kind of like a mega cap, and I think these companies are then going to have to stand against public market scrutiny, like the scoreboard that these companies actually have to really attest to. So it'll be really interesting. I think if we get these IPOs next year, it'll be a really powerful, really like referendum on the AI ecosystem, which is an opportunity and a risk for the broader space next year.
One thing's sure, our jobs are going to be interesting next year.
Will be.
Stephanie Aliaga, wishing her a very happy holiday, global market strategist at JP Morgan. More on Bloomberg Tech coming up. Time now for Talking Tech. First up, Mark Zuckerberg's philanthropy, the Chan Zuckerberg Initiative, has cut ties with the pro-immigration advocacy group FWD.US, which he helped found in 2013. Now, the split is both financial and structural, with several Chan Zuckerberg Initiative executives stepping down from FWD.US's board. Plus, the White House website was disrupted late Thursday night when a live stream showing a bearded man wearing headphones suddenly appeared on the site's live news section. It was not immediately clear whether the stream was the result of a hack or an accidental post. Now, the White House says it's investigating the incident. And DraftKings is rolling out a new app that will allow customers to trade contracts on sports and financial events through prediction markets. Called DraftKings Prediction, the app will launch in 38 states and will complement the company's existing sports betting products. Coming up, the fate of TikTok. It's not just about business. It's also an issue in the US-China relations. More on that next. Plus a quick check on these markets as we digest news that TikTok might be close to a deal. And as we see a bit of a reprieve in AI anxiety, NASDAQ 100 up more than a percentage point. We have got a ton of options expiring today, so there will be volatility during trade as we head towards a shortened week next week. CoreWeave, though, up 17% on the day. The Micron numbers yesterday, and Micron powers higher again today. Is that causing some relief that there is still demand out there, particularly for AI compute and infrastructure? Oracle up almost 7%. There we are, 7% on the nose, as it looks to be owning some 15% of TikTok US going forward, and a cloud partner that remains in the US, if indeed that deal goes through. From New York, this is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a look on the week and the day on markets. It's been a volatile one, folks. We've been whiplashed by concerns around the ability for certain AI players to afford the infrastructure build out. But we end on a high. We're up 0.4% over the course of 5 trading days. As we head towards the shortened week, as we have a lot of options expiring, we move on to the individual movers that I want you to keep an eye on this trading Friday. We're seeing Micron once again outperform after its earnings yesterday. A beat, a raise, and the market really goes wild for it. We're seeing Oracle up 6.9%. They have the moon music shifting on maybe some of those AI concerns dialing down on Micron's numbers, but also a potential TikTok deal where Oracle takes a 15% holding and future growth trajectory that all the analysts are talking about today. We'll dig into that in a moment. PDD, though, I want to shine a light on a Chinese player here. Of course, owner of Temu. They've been firing dozens of workers, which has been an extraordinary story revolving around a fistfight in China and Chinese regulators. But really the one to watch is the co-CEO and a new co-chairman of the board coming to light. And more broadly, what about US-Chinese relationships? What does the TikTok deal mean for the likes of PDD going forward? Let's discuss that further, because regulators, we understand, in China have yet to say whether they'll approve the proposed sale and new structure for ByteDance-owned TikTok, a decision required for the deal to move forward. Now, the fate of TikTok has become a key issue in the US-China relations under the Trump administration. Bloomberg's technology editor in Washington, Michael Shepard, you're joining us. You can help remind us, actually, what isn't agreed to yet, because the market is pricing in a deal with new US ownership and control and less than 20% held by ByteDance of US TikTok. But what haven't we heard yet?
Well, the loose end really, as you said, Caro, is Chinese government approval. And we may never really hear a full-throated blessing from Beijing for this transaction in the way we might ordinarily expect. We have heard from the White House very clearly. We all remember September 25th, President Donald Trump very publicly signed the declaration, the order, setting in motion the deal that was actually inked yesterday and announced in an internal memo to TikTok employees by company CEO Shao Chu. Now, the interesting thing, Carol, when you think about it, is that these are serious players. When you think about Oracle, when you think about Shao Chu, when you think about Silver Lake and MGX, the other three main new investors here preparing to take a significant chunk, together they would control about 45% of the new U.S. entity. They would not likely proceed unless they had a very good sense that China was willing to go along. Putting that pen to paper is a significant step forward than actually just talking about it, which is the stage we were at when we last heard back in September with Trump signing.
Mike, remind us, though, what else is really at stake here between US and China. NVIDIA is involved. We think about the chip war, the tech war more broadly. But also this week has been particularly concerning, considering what's happening in terms of arms deals with Taiwan. Can you just remind us really where the relationship lies at this moment?
Well, there are all sorts of cross currents happening here right now. You brought up the Taiwan sale, and of course, that envelops an industry that we cover so closely, chips, given that so many, the lion's share of the advanced AI chips are actually produced on the self-governing island. But the cross currents are so many. You talked about NVIDIA and the pending approval that President Donald Trump, at least verbally on his Truth Social, allowed the sales of NVIDIA's H200 chips to China. Jameson Greer, the U.S. Trade Representative, said on Bloomberg TV this morning that he sees that as separate. He sees it as a separate issue within the China relationship. Perhaps TikTok, in a way, is too. U.S. officials have brought up export controls and TikTok in their conversations with the Chinese. But the question is, are they able to break them away from all the other questions surrounding things like rare earths and also the tariffs that the Trump administration has been threatening against Chinese goods? So how much separation do we see in all of that? And are we going to see China offer something in return, or the U.S., vice versa? Is the H200 perhaps the olive branch that was needed to get China over the line on TikTok? We don't know. We're still trying to find out more about all of what went down, but we are looking ahead already to January 22nd, and that is when the deal is scheduled to close by.
Bloomberg's Mike Shepard. A complete wrap from Washington. We thank you. Let's talk about TikTok ownership and how it is just one of several points of tech friction between Washington and Beijing, as Mike was outlining. Amy Webb, CEO of Future Today Strategy Group, says the US-China race to develop and control technology is set to define the future of AI, of chips, of quantum. She joins us now. Amy, how does TikTok and a potential agreement play into the relationship, do you think? A positive for now?
Well, positive in terms of calming some of the concerns that the Trump administration had. You know, I would imagine that a lot of people didn't have Oracle on their bingo card as the biggest tech disruptor in 2025, but that's where we are. And that's because Oracle is a bit of a mixed bag. It's not on the forefront of innovation in critical technologies. This is a company that moves slowly. But at the end of the day, business is just about relationships. And Larry Ellison is a friend of Donald Trump. And if we think about China going forward, China is all about relationships and how that's going to impact not just the development of artificial intelligence, but so many other critical technologies that are now fully intertwined with business.
Okay, Amy. So potentially it's a positive in the relationship, the diplomatic relationship between US and China. But what more broadly will dictate it in 2026? We keep on talking about this undercurrent of a race, really. And in one way, we have an olive branch for TikTok. In another, we have still a desire to restrict very integral technologies going to China, and China building up its own chip supply chain and resilience away from the United States. Who's winning?
Right. So again, I think at the moment, China is winning, which is a controversial view, but let me tell you why I think this way. China has spent years investing in infrastructure. The United States has really had sort of a freewheeling innovation focus. And the challenge is we've got a handful of companies that are making through roads in their innovation in different technologies, but we don't have the physical infrastructure to support a lot of that, which is why you hear so much about data centers and energy consumption. China has been at the forefront of totally transforming what energy transfer looks like. In March, the CCP will have its meeting on China's annual 5-year plan. AI is the centerpiece of that. And there is a very clearly outlined every 5-year look at how that entire country is going to transform. We just don't have that point of view in the United States. So again, I think the TikTok thing is partially about competition, but it also signals a challenge that we have in the US going forward. We have to have some type of coordinated effort if we're going to remain competitive, not just from a business point of view, but when we think about our national and international competitiveness, whether that comes to talent or security or even geopolitics.
Yeah, remind us what's at stake. Because we all like to talk about a race, but many of us forget what the winning of it really means and why many in Washington and more broadly in Silicon Valley and everywhere are worried about China leading when it comes to artificial general intelligence or even superintelligence.
Sure. So some of this has to do with the chipsets themselves, the technology itself, and where China has made some of those inroads. So we sort of moved beyond the point where data is all that matter. Hardware matters very much going forward because that has implications for everything from pharmaceuticals to robotics. It cuts across every industry. And at the moment, we are at a bit of a disadvantage because China has pushed very far ahead in the future of telecommunications and the hardware needed for that, where they are deploying throughout Africa, and all of this is happening at a critical moment where the United States is retreating from a global stage. And that just sets us up for some significant challenges going forward, especially because technology is now part and parcel of everything that we do.
And we haven't even mentioned where we're trying to see 2029 go for quantum, for example. How much is that going to be something we talk about in 2026?
Well, there have been some significant breakthroughs already in 2025. And, that's come from sort of the usual suspects. So Google had some pretty big breakthroughs, as did Microsoft. And effectively what this means is we're moving from theory into actual use cases in practice. So it doesn't mean everybody's going to have a quantum computer next year. It does mean that the application becomes more accessible. But here, too, we don't see a national perspective the way that we do in China. We just have to start marshaling our resources in a cohesive direction. Again, not such that it is state dictated, but so that we have policy certainty, we have investment structures in place, and we are all able to row the boat of technology forward together.
Well said, Amy Webb, CEO of Future Today Strategy Group. It's wonderful to have some time with you. Thank you very much indeed. Coming up, OpenAI is winning over college and university campuses. I'll tell you how and why it matters for the future of growth. That's next. This is Bloomberg Tech. OpenAI is aiming to raise as much as $100 billion to pay for ambitious growth plans. Now, that's according to the Wall Street Journal. The ChatGPT maker is in early fundraising talks that could value the company as much as $830 billion. It needs a huge amount of capital, of course, to build its AI models and stay competitive. But exuberance of AI is waning a little, and public companies in the space have seen investors pull back and show some anxiety around the infrastructure build-out. But otherwise, we're looking at productivity and deployment of OpenAI's ChatGPT, and the company is looking to win over the next generation's workers by becoming their go-to AI tool of choice in college. Now, according to purchase orders reviewed by Bloomberg, the company has sold more than 700,000 ChatGPT licenses to about 35 public universities for use by students and faculty. It's far more than rivals like Microsoft. To tell us more is Bloomberg's Liam Knox, who covers higher education. And, remind me, it was only about a year or so ago that we saw this deep anxiety and concern coming from faculty members, from the future of education about the deployment of AI.
Absolutely. There's been a lot of consternation among professors, among educators about the effects of AI in the classroom, obviously about its use for things like, cheating and plagiarism, but also just its effect on learning outcomes for students. since then, obviously, it's kind of become a ubiquitous part of most classrooms. And so a lot has changed in the past couple of years.
Okay, so why is OpenAI wanting to really lean in here?
Well, there's a kind of tried and true strategy in the tech world. Google had a similar strategy around its Chromebooks and its suite of applications years ago when it offered free Chromebooks in classes. OpenAI is really hoping to make inroads with what they see as their future customer base, to put their ChatGPT and AI tools at the center of kind of workforce preparation, and skills training. And colleges are, it's already being used by students en masse at colleges, so it's kind of an obvious place to start.
Fascinating story. OpenAI inks college deals seizing early lead in education. Go read it. Bloomberg's Liam Knox. Thank you. Now let's talk about the fintech billionaire and SpaceX astronaut Jared Isaacman, who's finally been confirmed as the next head of NASA. He spoke with Bloomberg Tech's own Ed Ludlow about US plans to return to the moon.
This goes beyond just a recommitment to the Artemis program. This is the next big leap. We're not just going back to the moon under this space policy. We're declaring we're going back and we're going to establish the infrastructure. I mean, what space-loving fan out there doesn't want to see a lunar base? And then we're going to invest in the technology that's going to enable, frequent long-duration missions to Mars and beyond, whether that be through nuclear propulsion or nuclear surface power, which obviously has a number of useful applications, be it the moon or Mars. So it's an exciting day. It's absolutely extraordinary national space policy. And one that I'm not surprised to see, frankly. It was under President Trump's first term that we returned American spaceflight capability to the United States after a 10-year hiatus. It's when he kicked off the Artemis program, and now, we're taking it to the next level.
Administrator Isaacman, Jared, the question I get most for you right now in response to everything that's happened in the last few weeks is, how is NASA still relevant? Right? In a world where the private sector is dominating activity, it's dominating innovation. What is your answer to that question?
Well, Ed, that seems to be a common misconception. I mean, you go back to the 1960s, and NASA didn't go at it alone. I mean, we had McDonnell Douglas, we had Boeing, we had Northrop. These were all critical vendors and contractors that helped us achieve the near impossible of sending American astronauts to the moon and bringing them back safely to Earth. I mean, some of these companies still exist and play a huge part in the Artemis program. And then, of course, there are some new companies, like SpaceX, who's given us rapid reusability of their vehicles, and Blue Origin and Stoke. But it's the same thing. NASA is leading the ultimate high ground of space. And let's focus a little bit more on science, too, in that. I mean, as much as I would love to see private companies and academic institutions building, Hubble telescopes and James Webb Space Telescope and putting rovers on the moon, that is squarely in the responsibility of NASA.
Our own Ed Ludlow speaking with the new NASA Administrator, Jared Isaacman. Now, next up, we're going to be talking all things 2026. Look ahead. Where are you in the world of tech? Tiffany Wade joining us from Columbia Threadneedle. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We check in on these markets. They're higher on the day, they're higher on the week, they're higher on the year. We're up by 20%. Lest you forget some of the recent volatility, it has been a banner 2025. What about 2026? What's the outlook? Opportunities, risks? Pleased to say Tiffany Wade is with us, Senior Portfolio Manager at Columbia Threadneedle Investments. You've got a cool $714 billion in assets under management. How much is tech going to still be leading the charge in next year?
I think tech is going to be good again next year. I honestly think the setup for 2026 looks quite similar to this last year. We'll see another year of Fed rate cutting. In general, the economy looks pretty strong. Labor is a watch item for next year, but labor has been weakening for the most part of this year as well. And then we'll also see fiscal stimulus next year, and that'll come from existing stimulus continuing, such as the IRA, but also the tax bill. And then AI is going to be a tailwind next year, so I think it sets up well for tech and growth generally.
What needs to be proven out in 2026? Because I feel like 2025, we've all needed to understand the infrastructure needs, and then we've questioned the ability to afford all of them. But 2026, we're starting to see real needs to show signs of productivity and actual growth here.
Yeah, I think we're just starting to see the use cases build for AI, and we're starting to see it across the economy, right? Certainly tech is one of the early adopters for AI, but we're seeing it across the consumer space, across financials as well. And I think as that continues to build, that continues to, increase the use cases and the proof that AI is going to be ubiquitous across the economy. But also, I think, similar to a bit of the concerns we had earlier this year, we need to see that companies still continue to invest in AI, and they still see the returns from that being beneficial to continue the spending.
Have you done much analysis on what that actually means for the labour outlook? Because we've had Howard Marks saying this is sort of a disaster, basically, for the labour market, all of this AI focus. But we've had perhaps what people call AI washing and people liking to blame job cuts on AI, but we're trying to actually discern how much it really is happening.
Yeah, I think it's hard to say right now how much of the job cuts so far have been related to AI. There's some surveys certainly that suggest that some of the job cuts have been specifically related to AI. I do think there will probably be a period of digestion in the workforce. It's hard to say over the near term what the displacement is going to be. Over the long term, I imagine, like many sorts of technology innovations we've had over time, that this will probably be a net positive over a longer period of time for jobs.
So you're looking at your portfolio, aligning it for 2026. Is it going to be the same winners? Is it going to be the infrastructure play, the NVIDIAs, the chip makers, or is there now more of a shift for your mind's eye of getting into where the productivity actually happens, where the applications happen?
Yeah, I think we're very positive on the infrastructure spending as well, more so on the hyperscalers and some of the electrical equipment names that are involved in sort of the physical infrastructure spending, and then also some of the companies that are involved in helping to make AI scalable. So thinking of technology companies that enable, the usage, the deployment, the security around AI. So I think that's where we might see some of the leadership.
Palo
Yes, like
Networks,
a Palo Alto, a MongoDB, something like that. So the companies that allow AI to be scalable, that allow companies to, clean up their data to get it ready for AI. So that's something that we've heard from a lot of companies, is that the process of getting your data cleaned up and ready to be put into AI is very difficult, and something that a lot of companies are working on. I don't know that the productivity benefits, I think that's something that's probably still a little farther out, but it will be very widespread when it happens.
What about the end of year concerns around circular financing, about exposure to OpenAI and whether or not it can hit the revenue run rate that it's going to, and indeed our desire to be more discerning, really, about specific names?
Yeah, I actually think that the market being discerning about these names is a good indication that we're not sort of in a bubble territory right now, right? If we think about what happened back in the late 90s and 2000s, we were not concerned about whether or not companies were generating free cash flow, what the returns were on their investments. The fact that we're concerned about these, I think, means that the market is pretty healthy in the way it's thinking about investing in AI. And also, I think over the next couple of years, if you look at sort of the hyperscaler group in general, the amount of capex that's expected to be spent on AI infrastructure and broadly on AI, their free cash flow dwarfs that by several times. So I think that there's plenty of return and cash flow available to keep the spending going.
We've been talking a lot about the impact of the private markets. Are you expecting that they will become public next year? And how have your own clients been navigating exposure to big private companies?
Yeah, it's possible that we will see a number of these companies come public next year. I think that's going to be very interesting, especially for large cap investors. Certainly it's going to pack the indexes, because these will most certainly be included in a number of the indexes, possibly in size, which will have implications for large cap investors who may need to hold some of these names. And we'll see where the funding comes from out of other parts of the economy.
So we've got less than 30 seconds left. Do you want more diversification globally or across different companies as well right now?
I think we're still very comfortable. The U.S., I think growth in the U.S. still looks much better than lots of other parts of the globe. Certainly corporate earnings growth does, as well as GDP growth. So I think we're still very comfortable with the U.S. And then again, we still think the tech and other names related to AI infrastructure look very appealing for next year, as well as consumer spending on the back of some of that stimulus we'll see early next year.
Come back early next year, we hope. Tiffany Wade, we wish her a very happy holidays, Senior Portfolio Manager over at Columbia Threadneedle Investments. Meanwhile, that does it for this edition of Bloomberg Tech. Don't forget to check out the podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. Have yourself a wonderful weekend. I'll see you back, same place, same time on Monday. This is Bloomberg Tech.